Now here we have the S&P Mini, and you can clearly see that with this move over the past several sessions, the volume has declined all the way up. The RSI is putting in lower highs, a divergence there. You can see the MACD as well putting in a divergence. It looks like it wants to cross. Now this is the 30-minute chart, and we're also coming in at this sideways action again, very similar to what we saw in the Russell, where it was a distribution pattern, prices broke down, and they're rallying back up at this point. So we may in fact see something similar. If prices do want to go even higher, it would likely have even a lower amount of buying behind it, as well as just another lower peak on the RSI and on the MACD. You know, when you're coming in at a previous resistance level as well as a rally that has considerable divergences, your odds are favorable to a downside move.
And here it is up close even more for you. You can see what little volume there was. Now, the fact that it was Friday, it's often that you see lighter volume that trades, but check out the way the moves to the downside took place. You see this slap back down. You see this larger candlestick as well getting slapped down from this overall resistance area. Now, it remains to be seen whether we can go higher or lower. All we can say is that we have divergences on basically all the indicators. So understand that if we do go higher, then we would likely go and challenge the previous highs, but if we go lower, which is the least path of resistance, we could really sell off hard. And one last thing, next week is options expiration, and generally the specialists tried to shoot the market back up, or there is very limited downside for the most part. Now that isn't to say that we won't get a move to the downside at all. It's just to say that usually you see the trading somewhat more controlled than any other week. And here I have the Russell. You can see that with today's volume, we did have a fairly strong volume in the session. The bullish stochastic did get follow through with today. You see that the cross is now coming off of oversold levels. The MACD is starting to hook back up, so the indicators are starting to shift here, but we're also coming in at a previous cluster point. This is a resistance point. We pretty much went sideways for some time, so it should also act as a very strong level of resistance. It could be that we're setting up a lower high here in play. And here it is on the 30-minute chart. You can see the volume is obviously weakening each time. Buyers are less interested in purchasing shares. The stochastic looking like it wants to hook back down, but overall this pattern looks like it's almost consolidating. We'll have to see on Monday how that plays out. The MACD could be putting in a better defined divergence where it would come back up, set up a lower peak where prices go higher before it ultimately gives way, coming in at that resistance zone on the daily chart. And take a look at the US dollar. This is the 30-minute chart again. We do have a MACD cross, but leading up to this move, we had the divergences that you can see here. It led to a retracement, and then we had this huge rally back up. Now, if you notice, each time the prices are getting in this area, in this 80 level, it's showing resistance. It's showing that these swing highs are barely getting back above this high. And we saw that. You saw these swing highs getting smaller and smaller, and even with this retracement, we could just barely get above this previous high. A lot of things bullish for the dollar, but it was a little odd that the US dollar and the markets went up together. And that really is telling you that money out of Europe is going into the US dollar as well as into gold, into silver, into the market. So this could be very bullish for the long term, just keeping that in mind. And here I have GLD. It's the gold ETF. You can clearly see that there's this previous cluster point. You saw how prices reacted off of this level, coming in at this previous minor high. So I think the least path of resistance is to the downside, but if prices want to try and move their way higher, they're likely to inch up a little bit, but there's a lot of supply here, a lot of resistance still holding at this level. In order to really get back above these highs, we have to see a lot of buying pressure. 2, we really have to establish a base of some sort in order to allow for an accumulation phase to take place, and I'm not seeing that just yet. So let's just wait and see how gold can react next week. And take a look at silver. Silver is putting in this topping like pattern, and I'm going to add that to the chart patterns on the blog. It looks similar to this. Now it could also be that we're setting up a head and shoulders topping pattern here where we're sort of carving out the right shoulder. It's very possible. So I think that just with gold, silver will also follow suit, but if prices decide to go higher again, there is a slight gap here, but clearly below, there's not really much of a support zone. There is somewhat in this area, but the next support level would come in sort of here, a minor support level. And this is the Dow Industrials chart. We do have a topping tail like candlestick. We would need to see follow through with a close below the 12,906 level and 43 cents. But this is a topping tail like candlestick, so do keep in mind that we have this type of candlestick as well as coming into a previous resistance point. So, when you're trading, you're looking for your best odds. And so let's say you want to trade this pattern, okay? And the more and more I look at this pattern, it almost looks to me like a larger bear flag. But I'm not exactly sure. I can't make that assessment exactly for right now, but the way it's been trading, how weak it rallies to the upside, and it's just, that to me is what it looks like. Now if we decide to go any higher, I just see that there's such limited upside because we have this huge distribution pattern taking place. The volume again is really showing just signs of weakness. There's not much participation behind this. Every time prices decline, you see this very nasty looking type of sell-off. This actually right here was right when the jobs report came out, and we really did nothing. So I think if you were looking at this pattern, you would say that obviously with the fair amount of decent news that came out today, you would have expected that prices would have outperformed than what they did today. So keep that in mind and understand that when you see these kind of weakening patterns after fairly good news, it's almost a warning sign. It's telling you that it's actually probably not so good for those that are buying this. And going back to the dollar, I had mentioned several videos ago that I was looking for a close above the 10-week moving average, and we got that. Now this is a hammer, so we would really need to see a strong push above this previous high, and that is on the daily chart coming in at, let's see here, 80 and 11, really 80 and 12. With today, or sorry, the week's move, the stochastic looking like it's ready to cross, so there may be some more upside next week or in the several weeks to come for the US dollar. Here is the transports. You can see that the MACD looking like it wants to curl over. The stochastic has broken the 80 levels, so prices are finding support at the 50 and the 20, but can they get above the 10? That remains to be seen. This is beginning to show that now what was support is finding to be resistance. This is a support level, and we also had a doji candlestick, or this is actually a dragonfly doji, and coming in at a support level that can be bullish at times. But on the daily chart, it's showing you that with the 20 crossing the 50, and although we had a bullish cross on the stochastic, we did even have a divergence setting up. We also have a fairly large resistance that we'd have to get through, and that is this previous cluster zone, and as well as this slight one here, the moving averages. The MACD has yet to produce a bullish cross. So for the most part, if you look on the way up, prices were holding support at the 10 and the 20, and they should remain as resistance on the way down. And here is the VIX. You can clearly see that we did get follow through. It appeared that we would. From yesterday, we were looking at this candlestick, and now we again have a doji candlestick after another gap. The stochastic did get follow through with the bearish cross. The MACD has not yet. It could be that we're setting up a triple bottom here. It remains to be seen how this will play out, but it's you know, prices are below the 10-day moving average, and the 20 and the 10 are beginning to show how they're just really going sideways. So I really think that this is just a larger basing pattern, and eventually it will get closer to this 50-day moving average, which will then allow for a bullish hook to the upside. And with the weekly chart, we're getting this inverted hammer. Stochastic still remains oversold. It almost appears like we're putting in a higher low here. And so, you know, I think this is overall just a basing pattern. It's not a very bearish pattern. We're coming in at a, you know, a long-term support level here. So the fact that we're fairly oversold on this VIX chart, I would say that it's likely that we're pretty much here, and that we could very much see a thrust higher. And the last thing I want to point out to you is that we did get a bullish cross here. The 10 crossed the 20 on the dollar. We did manage to, the histogram bar pushed back up. The, you know, MACD is getting above the center line, so we'll have to see how this plays out next week. The volume today was strong, so things are looking bullish for the dollar. This is the 50-day moving average you see here, the blue line. It managed to get back above these previous levels. So again, thank you, and have a good weekend.